Hi, my name is John Stevenson. Welcome to the Guaranteed Retirement Guy Show. Today we're going to be comparing income riders versus the traditional annuitization method for annuities. All right, so if you're looking for the best annuity, you're looking for highest payout, typically income riders are the best, but we're going to compare. So you just have to decide what you're willing to do when you purchase an annuity. Okay, if you're looking for highest lifetime income, you might be thinking, do I need to annuitize it and lose full control of my premium? Or is there a way for me to get higher lifetime income and still have control of my money? Okay, that's where income riders come into play. So if you're interested in highest lifetime income, I would highly encourage you to go to my website, johnstevenson.com, and look at the income rider calculator there, and it will show you exactly what the highest payouts are. And then, of course, if you feel comfortable, you can book a Zoom meeting right there on my website, and we can chat about annuities, and I'd love to help you buy one if that's what you're looking for. Annuities can be a great tool for your retirement, especially if you're looking for highest lifetime income and you're looking to have a pension, have something that you cannot outlive, maybe supplement your Social Security, and still have money in the stock market. So it allows you to kind of do both. So, but I'm gonna compare the annuitization options as well as the income rider, and I'll show you the pros and cons. Okay. So, and then of course, if you want to book a call with me directly from this video, there is a link below this video and you can do so there as well. So I always tell people, do your research, see what's available before reaching out, because no one wants to feel like they're going to be sold, because a lot of times when they book calls, they're like, oh man, he's going to sell me. He's going to try to do something. It's going to be awkward. It's going to be informational. That's what it's going to be. So if you have questions and you're looking for some PDFs and you want the illustrations, that's where you'll get it. Okay. But if you want the numbers, just the raw numbers, and you want to know exactly what the payouts are, just use my calculators, and they're free. So they're free for you to use, and you can do your own research and absolutely reach out to me if you feel comfortable. If not, that's fine too. So hope this is helpful. All right. So looking at my screen, there is a client who is in Oregon. They're 58 years old. Their spouse is 59. They're going to put $600,000 in, and they want to wait till they are 62. Their spouse is 63 to take income, because they're going to start taking Social Security at that age. Okay. They might decide to wait longer, and we'll look at that. But for this instance, we're just going to show here's what the payouts will be with an income rider. Okay. So an income rider, it is $44,000 a year. Actually, you know what? These are increasing options. So I'm going to take that off here. Increasing options are ones that start lower and then go up over time. All right, so if you want something that is highest and never reduces, well, it's much, much better. So North American gives you $56,000 for the rest of your lives. Okay, this is plural. This is for joint. So when the account balance runs out, the income continues. That is how it is designed. Okay, so if I go in here and I illustrate it, I'll show you what I mean. So here's what's nice about an income rider. Okay, I'll show you what's nice and what's not nice. Okay. So what's not nice is what if the index does nothing? Okay, they're only giving you a little bit of the S&P 500 growth, okay, because they're buying call options. What if the S&P does nothing? Well, look at your account balance; it goes down. You might be like, well, why does it go down? Because there's fees. You can see right here, there's a rider charge. They're charging you fees here, and you can see they go away eventually because there's no more account balance to take it from. But they're charging you fees for an 8% compounded roll-up rate. Okay, that's why the benefit base turns into $648,000 in the first year, and then by the end of year 4, it's $816,000, and they're taking that and multiplying it by 6.9%. Okay, that's how that works. So if I go up here and say, well, I don't really want to wait till 62. I want to wait till 65. Okay, that's my goal, really. I want to take Medicare and I want to get the highest income. What can I do then? Okay, well, you can see North America and Midland right behind them. Still the highest option. Now, this might be different when you look at my calculators, because things are all over the place and insurance carriers are always changing their rates. If you see something good that you like, I would recommend that you lock it in, but don't feel rushed. Okay. You'll be fine. Not going to miss out. Okay. The only time you'd miss out is if the Fed is going to lower their rates drastically, then yes, the payouts on these would definitely decrease. All right. So we'll look at this and say, if we're going to wait longer to age 65, you can see that 8% compounded roll-up rate. It continues to grow that. So now it's $1 million. It's $1,028,000 multiplied by 7.2, because the withdrawal rate is higher because you're older. So, and that's a joint. Okay. If it was a single payout, the withdrawal rate will be higher. The benefit base is still going to be the same, but the withdrawal rate will be higher if it's a single payout. Okay. So just remember that. So at this point, you're getting $74,000 a year. That's really nice. Okay. It's really nice. So let's go over here and we'll say, What does it look like monthly? And then let's compare the annuitization. So before I compare the annuitization, let's look at the pros and cons real quick. Okay, it's $61.70 per month. So let's go back here and say, okay, the cons are the rider charges. We don't like fees. I get it. Okay, but the fees are taken out of the account value. Okay, they're not taken out of your income. And then this is showing worst case, no growth. Okay, if you have growth over here, the account balance is not going to go down, even with the fees. Okay, and it'll last a little bit longer, and therefore the death benefit lasts longer. See that death benefit? And if you decide to cancel it, there's a cash surrender value right there. They'll charge you fees. So let's look at the downside. The fees are, I'm talking surrender charge fees. So see there, let's say you wait like 5-6 years and you're like, I want to cancel it. Well, they're going to charge you 4.5% of the account value. That's as simple as that. If you wait after 10 years, they won't charge you anything. So, but if you set this up for a lifetime pension, you're not really setting it up to surrender it, but it's still nice to know. And this is a con, the surrender charge is a con, but the pro is, there is a cash value. With a fully annuitized contract, there is no cash value. You can never get your money back. And people don't like that because it's nice to be able to know that you have some liquidity here. If you do, and for some wild reason, you want to cancel it, at least you know you can get some liquidity. You can get your cash back. That's really nice to know. Okay. So anyways, that's the pro. The pro is you got liquidity. And another pro is you could turn on income whenever you want. Okay. You don't have to specify when to turn on income. Like with annuitization, you actually pick a date right from the beginning. Okay. And you can't change it. With this, you don't pick a date. You know what it's going to be because you got guaranteed right here. If you wait 5 years, you know what it's going to be. It's going to be 61 grand. If you wait 6 years, it's 67. If you wait 7 years, it's 74. Like it's guaranteed, but you can turn it on whenever you want. It's very, very flexible. So you have liquidity, it's flexible, and it's usually higher income. And we're going to look right now to see. And it also has enhanced lifetime withdrawal. Not all of these have it. Just disclaimer there. You see some of them, enhanced payments, okay? Some of them do not have enhanced payments. Enhanced payments is just a liquidity benefit. They double your income, or sometimes they'll give you 1.5 times your income, depending on the carrier. But in this case, they're doubling the income. Okay. So if one of you gets disabled, like you can't do 2 out of the 6 daily living activities, or you're confined to a long-term care facility, they will double your income, but they will only do it until the account balance runs out. Once the account balance runs out, it's gone. Okay. That's why I always tell people, do not buy this for LTC, because it's not going to be there probably in your 80s when you probably will need it if you need it. Okay. So it's nice to have it in the beginning, but it's not something that's going to be there forever. Okay. All right. So now that I've done that, we're looking at $61.70 per month. Okay. You're waiting 7 years. Now let's compare the annuitization options. Okay. So I go on here. Okay. Fully annuitized, joint life, and cash refund if something happens to us. So the insurance company doesn't keep our money. Okay. And then let's see, again, let's go back here. How many years are we waiting? 7 years. Okay. So go here and we'll say 7 years. All right. New York Life looks like they're the highest, $52.65 a month. Okay. Well, that's not as high as $61.70. You see? And it's fully annuitized. So it's just, sometimes it's a good thing. Like sometimes annuitization is the only way to go, especially if you're going to be an expat somewhere in another country and they require that type of contract, then yes. But for most of us who want lifetime income that's the highest for our money, and it's nice to be able to have more income. So this one, they're getting almost $1,000 more per month from a great company from North American, A+, 126 years old, compared to New York Life. Still A++, good company, but they're giving you way less income. So that's the difference, okay? And you pick a date right from the beginning. So if you pick a date, you cannot change it. Sometimes they allow you to move it around a little bit, but it's very, very rigid, okay? It's not flexible like an income rider. So just remember that. It's very, very important when you buy these that you know that there's no cash value. You cannot surrender it, and you typically cannot change the date. And that's it. So it can be very useful if you're looking for, maybe you're looking for something like you want a 30-year period certain. Okay. Then you can do that. You can say a certain period, say 30 years. So this means it's still lifetime income, but if both you and your spouse die before the end of 30 years, then they will continue to pay out that income to the end of that period. So if you die in 25 years, I'll still continue to pay it for another 5. So, but the income's a little bit less, like $49.60 a month. So it just depends on what your goals are. Everyone's different, but my job is to show you everything as a fiduciary. I have to show you everything, and I have to show you regardless of what my commissions are. Okay, because a lot of these commissions are lower, some of them are higher. And it depends on your age, depends on the company, depends on the type of product. So what's important though is when you do your research, you're being shown everything, and then you can decide for yourself. And I'm here to help facilitate the process. I can sell you an annuity. I can submit the application for you and take care of the whole process. Absolutely. But really, in the end, you've got to be able to have these tools at your fingertips so that you can do your own research. And then when you feel comfortable, reach out. So I'm happy to help. I'd love to help you purchase an annuity if that's what you're looking for. But if not, that's fine too. Okay, there is a link below this video. Goes directly to my calendar. It'll be a Zoom meeting. Otherwise, go to my website, johnstevenson.com. Book a Zoom meeting with me there, or you can just do research on my calculators. So I hope this is helpful. I hope you liked the video. Make sure you like, subscribe, share, comment below, ask questions, and I'd be happy to help. Thank you so much, and we'll see you next time.